What just happened? Why did we just get a rate cut and Bitcoin just tanked? This is strange, right? A rate cut is a positive thing, right? Well, I talked about this issue in a previous video, but I'm going to explain to you why exactly all risk on assets had a huge pullback after this guy's Q&A. Because it's not what you think. I mean, a rate cut is a positive thing, right? It increases liquidity, everything's all good. So why did we have this massive pullback in all risk on assets, including Bitcoin and especially altcoins? Well, it's in the details. And those details lie in the document that they released, all 17 pages. I've read all 17 pages, by the way. Most people haven't. So if we look, there are two factors here that caused this downturn. One is the revised projection of inflation. Previously, it was 2.1%, and now they are projecting 2.5%. That means that inflation is projected to go higher next year. That is a problem. Markets don't like inflation. That is a real problem for risk on assets. And that is part one of why that Bitcoin dump and all risk on assets happened. Inflation is bad, especially as their target was 2% inflation. And they cut. They cut even though they said that there was going to be higher inflation next year. That's not good. Markets don't like that. The second is the federal funds rate. It was 3.4, now it's 3.9. That points to only 2 cuts next year, not 3. The market had baked in 3 cuts, not 2. That means higher interest rates, which aren't good for businesses, which aren't good for growth, which aren't good for the bottom line. Hence, markets had an aggressive pullback, especially risk on assets. The third, and I think is the most important one of all of this, is the PCA inflation risk for December. See, previously in September, we had a broadly balanced chance of PCE inflation, which means it's a neutral balance. It could go up, it may not go up, it will depend on the market. But what has moved, by the way, this was on the 16th page of that super duper boring document that I read, is that it's now weighted towards the upside. That is a problem. That means that next year is going to be the year of inflation. This is what they are baking into the markets. That is not good. That is not good for the markets, and that is not good for risk on assets. What this means is that there's going to be less cuts, and there could technically be a hike in interest rates. Remember in my last video I said, how would the market react if they had a hike in interest rates and the Fed did a turnaround? Oh boy, this is worrying. And what's even more worrying on top of that is that they didn't announce any level of quantitative easing. So this is going to cause the market to contract for the foreseeable future. Let's see what Donald Trump's entrance does. Let's see what policies they can bring and maybe fuel it from the other side rather than from rate cuts. That's the key thing. That's what you need to understand. My name is Alvarez, 7-figure crypto investor, and I will catch you guys later. Peace.